Hi, my name is Ian from BeAWinningTrader.com, and I would like to thank you again for signing up to our free workshop, and I would like to give you a little bit more of an insight into what you can expect and what you're going to learn from attending the workshop. Now, everything and all our decision making is done through learning price action. We have a very, very distinctive price action methodology from which we make our trading decisions, and these are trading decisions that actually are made on any financial instrument and on any time frame. So what I'm going to discuss, as the slide says here, is why learning the basics of price action is so very important to you in your journey to being a successful trader. And folk, this is very much like maybe perhaps you could say it's the boring part, but anything that is boring, providing it is at the beginning of one's journey, is always very important. And having a very sound foundation, which the basics of price action are very key. So they are in relation to going forward and building upon those foundations. Now, price action trading begins with being able to analyze correctly single vertical bars, what we call inside vertical bars and outside vertical bars, otherwise known as SVBs for single vertical bars, inside vertical bars or IVBs, and outside vertical bars or OVBs. Now, each one of these have very much their own purpose in either the setup or the confirmation of the decision making process. And what I'm going to look at next is actually showing how the outside vertical bar in particular works in a real-time market. Now, when analysing single vertical bars and outside vertical bars, it is very important, everyone, to look at where the close is in relation to the high or low of that bar. So, as I will demonstrate in the next slide, if the close is closer to the high, then the probability of that particular market breaking to the upside is much greater than it is of breaking to the downside. Now, of course, this has to be taken in conjunction with the time frame that you're trading. In other words, a weekly bar with a bullish close, in other words a close closer to the high, is going to be more powerful than perhaps a close on a 1 hour chart, or a 1 hour chart close closer to the high indicating that it should break to the upside. That's going to be more powerful than a signal of a 5-minute chart, etc., etc. Now, when analysing an inside vertical bar, which also can be classed as a low volatility bar, the close is not so important. It is actually the direction in which the market breaks out of that low volatility bar, the inside vertical bar. In other words, does it break to the high or break to the low? But let's look in a real-time market. Now, this is the pound dollar, and we have down here is marked at close at 129.05. But first of all, this move up begins with an outside vertical bar. And what is an outside vertical bar? An outside vertical bar is when you're always, as far as technical analysis goes and making trading decisions off charts, everyone, you always must look to the left of your chart. Okay? Now, an outside vertical bar means that the bar that you're looking at has got a higher high up here as per the pointer than the high to the bar to its immediate left. And it has also got a lower low than the low to the bar in its immediate left. So you can see that this bar had a lower low and it had a higher high. So the next thing we're looking for is the close, and we're looking for to see, is this close here, which is indicated by this little tick, is it closer to the high or closer to the low? If it's closer to the high, we're not so much interested in the open, we're only interested in the close in relation to the high or low. If it's closer to the high, the probability of this market going up next is much greater than going down. Now, these are just the basics, but you can see what happened this market. It had an outside vertical bar to the upside, and when I talk about to the upside, I mean it had a bullish close above the average range of this bar. The next day we had an inside vertical bar. What is an inside vertical bar? A lower high and a higher low. So in other words, this market had been in a trend that was going down as per the red line. The market now had reversed, which was indicated by this outside vertical bar. Immediately after, which doesn't always happen, folk, we had an inside vertical bar. So that was telling us, well, hold on, this market now perhaps is gathering a big breath. In other words, to make the push up. Of course, the market went up. The market had a bearish close and a single vertical bar, but the very next day, so within another couple of days, another outside vertical bar to the upside. So this close here was at 129.05, folk, and this market began, it came down, and the second outside vertical bar to the upside was another one at 130.27. So every time you get this is telling you that any sellers have been rejected at these lows. This was indicating weakness, but the seller again was rejected at these lows, another outside vertical bar to the upside, and this market then rallied from 129.05, the close of the first vertical bar, and then the close of the second, right up to a high of almost 133, a 400 pip move and almost a 300 pip move in the second outside vertical bar. This is the power of just using vertical bars in your trading. So keep an eye for them, look out for them, look out especially if you're looking at daily or weekly bar time frames, and if you're trading those, certainly with the trend, you will make a very good trading decisions based on where the close is in relation to the high or low of an outside vertical bar. Now, I want to show you how you can put this into perspective. So we've only analysed, or very briefly analysed, dare I say, the power of outside vertical bars. But something that I want you to show you very briefly is when you start putting this in into your trading plan, when you're trading it with what we call the vertical bar trading pattern trend, and this is picking out the highs up here, the lows, as somebody once said, these zigzag lines, these are picking out what we call the confirmed vertical bar trading pattern highs and lows. That's a confirmed low, that's a confirmed high. Once this line here was broken, this market had changed trend because it was a higher low over to the left. It broke through that, indicating a trend change, and look where this market went once this was indicated, from about 140 up here right down to 128. This is by trading just the vertical bar trading pattern trend, something that I will talk about in the next video, and something that is very much going to be shown in an awful lot more detail in the free webinar. So I hope you enjoy what I have briefly described there. You can see the power of just how the basics of price action go into our trading plan, and then when we use it in conjunction with our vertical bar trading pattern. Now, I would ask you, please take this simple but yet important information on board, because it is without doubt the foundation to your trading success. Thank you.